everyone, and welcome back. My name is Greg Furman, and these are the market positions for November the 8th, 2017. Now, our first trade for tonight is going to again be in the Forex market. This time we're looking at the Canadian dollar, Japanese yen. Now, we have oil prices rising, which should favor the CAD against the Japanese yen. The yen is still under pressure from the US dollar, and as we see gold moving lower, that is putting additional pressure on the Japanese yen. So when we look at this particular trade, what we can assess here is the key vantage point level comes in at 89.26. We are closing right on that particular level, but we have pretty much a fresh triple EMA cross, and we're again playing a range between our upper supply area and our lower demand area. That the supply area coming in about 90.50 and our demand at around 88. Now our neural index is down, but we can assess here that our medium term is crossing over our long-term predicted difference to the upside, telling us that this trend to the downside is weakened and we're moving higher. We have a crossover in the predicted MACD very close to that zero line, and we're holding on the predicted RSI at 51.5. Now, the failure to break above 60 is a bit of a concern, but we're still, for now, okay, again, in my respectful opinion. So when we look at our individual crossovers, our short term looks quite good, our medium term looks good, and our long term is attempting to make a crossover pretty much right now around the 89.13 area. So from here, guys, we go into that all-important daily report to fine-tune tomorrow's entry point. Now, the Japanese yen is always very volatile, but the CAD is still pretty strong. So we're going to look for a pullback to 88.74 within the daily range. And again, to point out, this video is being produced at 6:15 p.m. Eastern Standard Time. So the daily range, as defined by VantagePoint, 88.74 to 89.63. We know we want to make sure that we keep our stops below 88, this lower trend line. We have clear demand for this particular current for Canadian dollars against the yen down to all the way down to this price. So we look for that pullback to 88.74, stops below 88. Then we're targeting, ultimately we are going to target up towards the 90.50 area. Now our second position tonight is going to be an American Movil, the AMX stock. Now what we're looking at here, the first thing we want to do is identify where our tops and our bottoms are. We can assess that we have pretty significant support coming in down at or about the 1675 mark. Now the indicators from VantagePoint here, our neural index has turned positive, but once again we have this medium term crossing over the long-term predicted difference in the opposite direction in which the market has been moving, which has been to the downside. Now our key level at 1763, we still need to get past that particular obstacle, but our predicted RSI is recovering, predicted MACD is starting to recover also, so all of these things are certainly have us looking at this particular stock, to say the least. Now when we break down those individual crossovers, our short-term crossover is moving higher. Our medium-term crossover is also moving to the upside, but of course our long-term crossover is not ready to continue higher yet. But the majority of our short-term indicators, which is our neural index, our strength indicator, and short-term predicted difference, combined with that medium-term predicted difference crossing, tells me that we probably are moving higher on this stock, and this could be some decent value getting in a little bit early, despite the fact not all of the indicators have confirmed a long trade here. So with that close of 1744 for tomorrow, we're looking for a minor pullback to 1727 within the normal daily range. We're then targeting 1764. When we look at stops here, guys, all stops must be below 1650 to give this trade a chance to develop. Now, if it does start to develop, then that would see us move back ultimately towards the top of the current range towards 1950.